Kingma, thanks very much for joining us. For those who don't know PropTech1, just I suppose tell us a little bit more about the company.
Sure. So PropTech1 is a venture capital company that invests into mostly seed and Series A. So these are quite early stage startups that focus on the built world, namely the real estate, the construction, and the infrastructure industries. And we were started by our partners Nicholas and Anya in 2018. We were started in Berlin, in Germany. And we've since then expanded into London as well, where we have our second office. We make investments into European and specifically into Northwestern European countries, where we have strong relationships with the real estate industry and the construction industries in many of these countries. And we're really looking for scalable technologies that really impact the built world. So particularly the themes are digitalization, the themes of sustainability, and the themes of helping real estate asset managers and owners adapt their real estate to changing demographics and changing needs.
And obviously, as a sort of venture capital investor, you're at the forefront of some of these investments, I suppose, in terms of the transformation of the real estate industry. So what are you investing in, and how do you see that developing when we look at the real estate sector?
So when we talk about scale, often venture capitalists talk about software because software is easier to scale. There's far less issues regarding to logistics and supply chains as well. However, when it comes to the context of PropTech, and we therefore have to look more broadly into the real estate industry at large and the construction industries too. And we know that both these industries are huge, and they're also under increasing regulatory pressure and also consumer pressure, tenant pressure at the end of the day to be able to improve the sustainability of their own underlying assets. And so when it comes to this topic, I think we're looking also at technologies that are more hardware driven, that can be implemented into real estate buildings, into construction sites, for example. So it could be, for example, in the material science space, where we're looking at end-to-end how different buildings can be constructed using different alternative materials to concrete, to steel, which are quite polluting. We're looking into technologies that can extract carbon from the air. We're looking into heat pump technologies that can replace gas boilers. And so these are all hardware products. But because of the growing attention, growing awareness, and growing regulatory pressure for these industries, there won't be any shortage in demand, let's say, in the next couple of years for these products.
In terms of the timescales, Kingma, I suppose, how long do we take from that initial investment to actually beginning to see some of these solutions in the market?
As a early stage investment company, we invest into companies which generally are making some revenue, therefore have a good proof of concept. It could be, for example, in software, an MVP, in the context of hardware, some pilot projects with initial customers. So they kind of know, the founders, the leaders of these startups kind of know who their customer groups are, what their unique value proposition is compared to whatever else exists in the market. And so we make early stage investments, and we expect these startups to be able to grow significantly in the 4, 5, 6 years after we make these investments as well. As a fund, we have an investment window of around 5 years, and then we have another window to be able to realize the exits of these investments as well in, let's say, another 5 years too. So we're really looking for startups that can grow very, very, very fast, and therefore have a brilliant exit opportunity within a decade.
Really interesting to catch up. Thanks for joining us, Kingma.
Thank you, Richard.